Stay tuned because next up is David Charles Allen, Village Properties Realtor and host of The Hop. That's Home Ownership Podcast, here to tell us about real estate in Santa Barbara.
Welcome to The Hop. This is David Charles Allen, Realtor at Village Properties in Santa Barbara, California, with my great friend and co-host, Patty Teal. I'm doing wonderful today, Patty. How you doing?
I'm doing great too, David. Thank you.
Good. We got some beautiful weather here in Santa Barbara, sunny skies in the 60s. We may get a little bit of a sprinkle in the upcoming week, but it's looking like sun throughout the foreseeable future.
Sounds beautiful.
It is beautiful. And then if you're a surfer too, looks like there's some swell coming in today. But by the time this airs, it may already be here, it may already pass, not too sure. But it's looking like a good winter.
Great. Are you going to get out there, David?
Yeah, looking to get out there today at some point. So it should be fun. And then in terms of how interest rates are performing, we're at 5% for 30-year jumbo and 5.75 for 30-year conforming. So no change over last week.
Just holding steady.
Holding steady. And then in terms of how the statistics have performed, we got 27 new listings, 10 price changes, 15 that closed, 18 that went pending, 3 back on market, and 1 that were coming soon. So that's good. We're in the high 20s. We want to be in the 50s or 60s. That would be a really solid seller's market in that sense, but really no huge buildup of the supply, still low inventory in a sense. So it's an interesting market we're in.
It is an interesting market.
Any questions of the day for me?
Yeah, a listener sent in an article, and the article's title was Mortgage Rate Buydowns on the Rise as Homebuyers Cope with High Interest Rates. So, David, to be honest, I don't even know what buy downs are, although I do kind of now since I read the article, but I was hoping you'd address that.
So buy downs are essentially the seller pays for the cost of what your interest rate payments would be over a certain period of time. So say it's a buy down, a 2-to-1 buy down. For the first year, you're going to have an interest rate that's 2% less on your mortgage in monthly payments. And the second year, you're going to have a 1% less interest rate on your monthly payments. And then the seller, whatever those costs were, the seller pays for those costs. Say the 2-1 saves you $20,000, the seller pays that cost. So it's interesting when you get in these times when everything starts becoming more balanced, things are shifting a little bit. They start offering packages that are looking intriguing to some people. But in a sense, what a buy down is, it's just kind of a glorified price reduction. It makes the person buying it feel better about having a lower monthly payment for so long. But in a sense, maybe the person is more inclined to get a price reduction. And depending where you live, that means you can have a lower property tax for perpetuity if you own the home. Or maybe you can have more money up front that you can spend on some of the upgrades you want to do. So in a sense, it's just a price reduction. But once we get into this balanced market, these loan officers and mortgage brokers start offering these kinds of things to make people feel better about the purchase. And sometimes these packages do help, and that's what the way some buyers want to go.
Well, thank you for explaining that. I couldn't tell in the article who was making the offer. So does the bank ever make this offer to make it more enticing, or is it pretty much always the seller?
No. So why they're offering it is the mortgage brokers are offering it, telling it to their buyers like, hey, tell your agent to ask for a 3-2-1 buy down from the seller. So then the seller gives the credit to the bank. The bank still gets paid the same. But it's just the mortgage broker basically saying, hey, offer this to the seller. It's good for you. You get money back. And maybe the seller will accept it because it's a more balanced market. You have an opportunity to lower your costs. So in a sense, it's basically, let's say you save $20,000. It's basically like asking for a $20,000 price reduction in the purchase price.
Oh, I didn't know much about that at all. Is this very common in Santa Barbara?
I'm definitely seeing a lot of the mortgage brokers I work with offering these packages.
Mm-hmm.
So it's the same everywhere. When things start slowing down, they get creative to find new ways to make deals go through, which benefits them because they get paid the same. But it also can benefit buyers because they get to offer that package to the seller. And sometimes the seller may think like, I'll pay for the buy down, but I won't pay to lower the price. So it's kind of like an olive branch of sorts. Like, hey, the interest rates are high. If you can help us with the interest rates, we'll buy the house. And it's not so stern, like, hey, we want a reduction in price. Otherwise, we're not buying it. So sometimes it could be very helpful, but you just really got to look at what's best for you. And like I said, where you're going to be saving the most money and how you're going to be saving it. And what's that most important factor to you?
Thank you for explaining that. So the buyer can never put that in their offer. It has to come from the mortgage broker who is doing those loans.
No, the buyer basically does put it in their offer. So they either put it in their offer originally or they put it in as asking for this to be included in the contract or they're going to walk away.
Oh, and then
So it's
when
basically a negotiation.
Negotiation. And then when that time period is up, it goes back to the interest rate that is offered normally.
Correct. Their initial interest rate.
Well, thank you so much for explaining that. I was a bit confused about it. Sounds like a good thing for buyers to know about.
Yeah, it's a good thing. Like I said, though, it's a glorified price reduction, but it's sometimes in some instances, that's what people want. And that's going to be most important to them to have that lower monthly payment for the first couple of years instead of a price reduction or anything like that. So it's really going to be situational and who it benefits, but it's pretty simple when you think about it in being a price reduction in a sense.
Right. And in the article that I read, the buyer felt like after the time period was up a couple of years when they were getting the discounted rate and their payments were lower, they would be in a better position to pay more.
Yeah, you can be in a better position, but it also could make you feel bad about when they do raise too. So.
Oh, sure. Yeah. It was like several $100s less just last month.
Yeah, exactly. And then you're like, how am I going to pay for these costs? You start stressing yourself out a little bit more. So I think it's kind of like an adjustable rate mortgage. People think, oh, if I get in this adjustable rate mortgage, I get the lower percentage for the first 3 years and then a little bit higher for 5 years and then really high for 5 through 30. Like I'll have it all figured out by year 5, but it rarely ever happens that way. Life happens and things come in waves and take priority. And at that 5th year, you have that huge spike in your interest rates and you really weren't there to where you wanted to be. And then that's when you become underwater in a sense. And that was that huge problem with what happened in the late 2000s.
Right. Yeah. Just don't know what's going to happen with the housing market in a couple of years, whether you'll be able to sell it and make a profit or not. So
I always think you want to be able to budget for the mortgage you're going to get, the monthly payment you're going to get. And if you're thinking about it, oh, well, I don't have to do it until 3 years. I think that's a little counterproductive in a sense. You want to just plan, hey, this is going to be my rate day one and I can afford this. This is the house I can afford. If you're buying down your rate thinking, oh, well, I can afford the lower one now and I'll work my way up. That's when people start getting into trouble. So it's an interesting kind of balance of what you should do and what's most important.
Right. The example you gave was 2 to 1, where 2% down the first year, 1% down in the second year. Are there other equations that could be used in the loan?
I think there's 3-2-1s too. So 3% in the first year, 2% in the second year, 1% in the third year. If you look deeper, you can probably find multiple different ones, but they're all going to be kind of similar like that.
Well, excellent explanation, David. I really appreciate it. If our listeners want to learn more or talk to you about that, how would they get a hold of you?
Yeah, my number is 805-617-9311. And my email is david@davidcharlesallen.com.
Great. And how are your fur babies doing?
They're all doing really good. Bailey won't let Moose on the bed right now, so he's a little bummed. But other than that, everything's going really well.
Well, now that's hilarious. Little Bailey won't let Big Moose up on the bed?
Yeah, sometimes she just says, like, this is my space. So,
well, she was the firstborn, so I guess she has to assert that authority once in a while.
Yeah, she's sitting there sunbathing, and Moose is like trying to get up on the bed, and she won't let him. And so
that's
she's on the floor.
So funny, David. I don't know if you're into taking videos, but it sounds like a little video that might go viral with a little tiny dog telling big old Moose that he can't come up there.
Oh, yeah. I mean, that's a daily occurrence.
Very, very funny. That's so funny.
Yeah.
Well, thank you so much for sharing that. And again, would you one more time give your contact information?
Yeah, my number is 805-617-9311. And my email is david@davidcharlesallen.com.
Thank you so much, David.
All right, Patty. It's going to be next week.
For sure.